Hi everyone, welcome to Karan's Gyan. Today I'm going to discuss about a fintech company. This fintech company has a market-leading platform for the segment banking, financial services, and insurance. So let's kick off with Intellect Arena Design. It's a mid-cap company, market capitalization around 12,000 to 14,000 crore. Currently, share price is 1,000 rupees. And I find it an undervalued company in the segment, which has a lot of prospect for future growth. So, background. Um, s- as I mentioned, it has a market-leading platform for banks, financial service providers, and insurance. But before I delve into the platform, let me just talk about the current IT company environment that we have for India as a whole. As you know, this segment, banking, financial services, and insurance, it contributes to a major chunk for a lot of IT companies out there. If I talk about TCS's portfolio, like a third of its portfolio comes from this segment. If I talk about Infosys makes 28% of its revenue from services provided to companies that are involved in financial services. So we see that there's a lot of room to make a lot of money in this segment, particularly. But let me just talk about the IT aspect of big banks. Talking about making IT revenue from these banks might sound easy, but if I delve into the IT infrastructure of these banks that they have to maintain, let's just consider my transaction. Uh, you have a database of my transaction of not just one account but from multiple accounts like current savings and also maybe cards. I might have loans, mortgages, and other investments. With respect to cards, I'll have debit cards and credit card, and there'll be a customer journey based on how I was acquired from the bank, how's my credit card doing, etc., etc. So there's a plethora of transactions records that need to be maintained whenever a bank has any IT infrastructure deployed. Now, add my personal data and my profile, which is changing every period of time into play. Now, add another 100 million customers as add that data into the account. And it's not just 100 million customers that you're talking about. Each of these customers might have a joint account. So you not only have one account, multiple products, but you have multiple accounts, one product as well. And again, multiple accounts, multiple products. So as you see, the infrastructure that a IT company has to maintain for a bank especially is huge. Moreover, I add other information into play. I add changing strategies, changing customer journeys, changing data infrastructure itself. On top of this, if a company has to adopt a new platform or has to scale a platform or provide security to this platform that's uh, in discussion a lot in these days, and moreover, check for government regulations such as KYC compliance, etc., etc., into play. Now, I'm doing all this while running a successful bank and trying to maintain a strong asset quality and deposit quality. Uh, Now, if a bank would like to deploy its solutions into a cloud or implement some machine learning techniques into this, it'll be really hard for a bank to do this without shutting down its shop for a few days. And this migration process takes a lot of time. Hence, this brings us down to Intellect Arena. So, Intellect Arena is the world's largest cloud native multi product enterprise fintech company for banks, insurance, wealth, credit unions, capital markets, and corporates. Basically, what this company has done is like, hey, as a bank, you have to have a lot of services, you have to have a lot of events, APIs that you need that you're procuring from different vendors. Why don't you all just come to me and I will reduce your banking space to a finite number of events, microservices, and APIs that would simplify your adoption, help you decouple complexity, and would help you scale in the future with more modern technologies coming into mix, such as cloud servicing and um, artificial intelligence or machine learning. So this company currently has 300 customers from 57 countries. And if I talk about banks majorly, more than 60% of world's top banks, they partner with Intellect. 6 out of 10 North American banks, 9 out of 10 European banks, 10 out of 15 Middle Eastern banks, 13 out of 15 top Indian banks, and 7 out of 10 top Southeast Asian and ANZ banks, which is Australia and New Zealand banks. So this is just the basic background about current challenging challenges faced by banks, financial service providers, and insurance companies, and how Intellect can maybe come into play. So Intellect has something known as eMACH.ai. And no prizes for guessing here. AI is again artificial intelligence acronym. You'll find a lot of products with .ai written, and this would be a norm in the future. And I'm sure you'll remember me next time you see AI.ai and you remember and you're able to correlate it with artificial intelligence. Again, moving on to Intellect. So Intellect has a comprehensive, compostable, intelligent open finance platform, comprehensive, where it has a lot of services such as 329 microservices, about 1800 APIs, and 540 events. Uh, Compostable, it can easily be deployed, easily be scaled, easily be modularized. And again, intelligent open finance because, well, they are using artificial intelligence, hence intelligent. Well, this is not my wording. I've just copied it from the company website. It kind of makes sense to me, hence I put it right here. If I talk about the other part of it, which is event-driven architecture, ready to use microservices, and API on Cloud Headless. Now, there are a lot of keywords being thrown at you. Let me just break it down to you. What exactly is event-driven architecture? So, an event-driven architecture uses events to trigger and communicate between two services. It is very modern. It is used in modern applications that have microservices enabled. For example, if I have a account with, say, HDFC Bank, and I open a credit card. Now there'll be a microservice involved where the credit card database and the core banking digital database would communicate, and my records of the customer journey would be transferred to the credit card database as well. So there's an event, which event is basically me getting a credit card, and subsequent microservices taking place to implement that. So basically, and it's an integration model built to publish, capture, process, and respond to events across distributed services in real time. Talking about microservice. Microservice basically enables team to deploy and develop their services independently, allowing developers to evolve their services with limited restrictions and hiding additional complexity from the users. So basically, users are not seeing what's happening in the background. Moreover, developers find it easy to implement front end, back end changes without any major issues. Talking about headless. Cloud headless. So cloud headless is basically something that's new, and it's something that would take the world by storm. Basically, in a traditional platform, what happens is the front end and the back end are tightly joined together. Front end would be the user interface that you're seeing. Back end would be the data that the user interface or the front end is pulling to display particular information or whatever you'd like the user to see. So they're very coupled. So now if I want to make change to the back end, I'll have to make change to the front end. What happens in headless architecture is basically both the sides, they are decoupled. That means I don't need to make appropriate changes in the front end reflecting the changes I made in the back end, and helps with user simplicity and developer simplicity. This is important because this company has created an entire platform that uses modern form of banking that traditional IT giants have not been able to implement on a plug and play solution wise. These top IT companies, they create specific solutions for these big companies that may or may not be scalable, may or may not be as scalable as the solutions brought by Intellect. So now just let's just delve into more about eMACH.ai because it sounds very interesting, and it's important for us to understand since it's the only platform made by this company, and this is a possible company if one would like to invest in, would like to also understand more about eMACH.ai. So this is basically the entire cartographic map of eMACH.ai. I would basically put it as how its architecture would look like for a layman. So now you can have various customer segments onto this platform: retail, wealth, corporate. You can have digital channels that these customer segments are using. Hence, there's an omni-channel route right here: laptop, phone, mobile, smartphone, messaging, and again, desktop. If I talk about partner channels, there can be fintech apps, marketplaces, or other enterprise apps that can basically that are basically used by these customer segments, and whatever happens in these channels is brought on forward. So let's just understand more about what is the structure of eMACH.ai. So again, you can have a head journey, which is basically a digital experience with a head, where the front end back end is basically combined together. This would again be based on Intellect's design principles. You can have a headless form where a bank can basically take care of this entire thing, and they can provide their own digital experience from start to end. And there's open banking. That means if a bank has particular developers, it can use its own developers to develop APIs for their own personal needs, with an inclusion of sandbox. Sandbox is basically where you see your current API is working or not. It's just a sandbox with a test user database, testing on various experiences that they're trying to create for users. Again, this all data designed would come down to the engagement platform, where all the data is stored, and there are microservices based on whatever segment you want. For example, if I'm talking about one aspect, for a core banking platform can be core banking, lending, and cards. So basically, for these three system, I can see who are my customers. I can see what are the digital channels they are crossing through. I can create their own digital experience. I can have a digital engagement platform for them, and I can use microservices, APIs to get all these data. Moreover, I can create my own compostability rules, and I can use my own contextual AI platform that can give me graphs, classification, extract information for me, make decisions for me. And again, it uses a variety of platform services that a bank already uses. Oracle, Kafka, Docker, etc., etc. And again, this can be stored on public cloud, virtual private cloud, managed private cloud, or on-premise private cloud. Not done a good job explaining this, but basically what it tells us is the breakdown of this entire platform on how it works on a bird's eye view. So basically, eMACH.ai provides five solutions. The two most important are core banking and iCredit 360. The other are digital transaction banking, wealth, and insurance. Let me just go with them. So with core banking, they have something called IDC, Intellect Digital Core, which empowers financial organizations to offer contextual experiences to their customers. The platform covers core operations, lending, cards, payments, trade finance, treasury, and digital banking. If I talk about iCredit 360, it's basically a credit-based software that helps and expands and extends credit experiences to become primary engagement point for their customers by offering both specialized and common credit products across all business segments. I'll get to this in detail, but basically these two are majority segments for any IT company that is also looking for its customers in BFSI. These are the products that develop. They develop core banking solution that helps them with core operations, etc., etc., and a credit solution that helps them track a lot of aspects of a credit journey for a particular customer. Talking about Other things, digital banking transaction, digital transaction banking, wealth, insurance. I wouldn't go into these three segments of work because, well, this is not where the mammoth is. Talking about core banking. So eMACH.ai has this module IDC, Intellect Design Core, where they provide an integrated suite with current and savings account, deposits, cards, payments, lending, etc., etc. They have intelligent behavioral models such as credit evaluation, relationship, and risk-based pricing. So risk-based pricing is basically it can identify customers that are more risky and hence offers them loans at a higher interest rate. This is something that banks struggle with a lot because they're not able to properly approach the problem of risk-based pricing because they're using so many services from so many different vendors that they don't have a proper decision-making system for it. And this all gives them a consolidated platform where they can have intelligent behavioral models deployed for them to make these decisions. Um, so they have rule-based engines, again, pricing, transaction interceptor, credit origination, NPA management. They have AI and ML models that help with the risk analysis and intelligent data extraction. If they're open banking compliant, you can leverage a comprehensive UK Europe ready marketplace to collaborate, accelerate business growth efficiency. Again, it's open finance enabled for UK and Europe, so it's a plug and play solution for any European or a British bank trying to start its own bank. Uh, and it's again built on eMACH.ai architecture with 285 plus microservices on cloud, etc., etc. It's easy to scale on demand, ease of integration with partners and marketplace. And yeah, well, that's the basic of their core banking. Coming back to architecture. So with architecture, how it works is initially have a user interface, user experience. There can be a standard UI or bring your own UI where banks bring their own UI. Then there are channels through which a customer basically reaches out to you. That channel can be an assisted help channel. It can be a self-help channel. It can be a partnered help channel such as phone banking or chat or email or 3P app. um, Moreover, if I talk about domain services that they provide, so again, these are the services that are a part of these core banking product. Uh, CISF services, deposit services, payment services, remittance services, all that jazz. If I talk about enterprise services, you can have collateral management, pricing policies, fees and charges, foundation services. So all the services, all the life journeys that you have for a particular client is all in that core banking solution that is cloud ready. It's a plug and play solution, can be scalable, and is being developed constantly for it to align with what the industry wants. If I talk about just the platform of IDC, how it basically interacts with other platform, like I said, all these products that they have, they can easily be linked up. They're modular products, and that's the plus for eMACH.ai for Intellect that should be appreciated because their Intellect Design Core, which is the core banking application, can be connected to other platforms, iCredit 360 and digital banking. Moreover, you have point solutions for cards, super app, wallet, and you have other business components that can be accessed via the core system through APIs such as demand and time deposits, overdrafts, payments, trade finance, treasury, general ledger. Well, there are a lot of keywords for you, but basically, as I reiterate my point, they have provided a very modular structure that can be scaled, adapted easily, and everything's on cloud. Talking about iCredit 360, like I mentioned, it is one of the core platforms that the core banking solution Intellect has connects with. So traditionally, lending modules are packaged and sold along with core banking. Basically, if a IT company comes and says, "Hey, I'm selling your core banking solution. Let me just package in a lending module that can help you track your lending journeys better." So they're just packaged with it and they're sold along with core banking. This is what major companies do: TCS, Infosys, Wipro. It is a massive transformation exercise to implement a new core or to change an existing one. That means if I am running some new developments on my core banking database, core banking platform, I would have to basically conduct this massive exercise that would change the corresponding lending modules or other modules that are associated with the core banking platform that I have. In this case, iCredit 360 is a new age standalone credit platform that only provides a comprehensive coverage of all banking needs across the asset platform, but goes even further to curate niche and relevant solution across products, channels, enterprise verticals. So with its ability to converge multiple elements in its ecosystem, iCredit 360 empowers banks to expand and extend their credit experiences to ensure a superlative customer experience. So one of it is relationship touchpoint convergence, whereas if a customer has reached out to me via branch, call center, web portal, mobile marketplace, it is all there in my CRM. If I talk about credit product convergence, I can have different products inside my platform without any problems. And if these products are changing over time, well, I can change them over my time without doing a lot of effort, because there is headless cloud where you can change the backend without changing the front end and change the front end without changing the backend. And this all comes under backend. If I talk about credit lifecycle convergence, I can look at the lifecycle basically from how I acquired credit to how I'm paying off that credit and to what is my condition right now, if I'm performing or not performing. If I'm not performing, what can be done and what is the life cycle of recovery or collection from me. If I talk about internal ecosystem convergence, again, with all these three things into play, there needs to be an internal ecosystem such as rules engine. Who do I lend to? What should their credit score be? What is their monthly salary should be? How many dependents they should have? So there are rules for somebody to get some credit. So again, it helps converge these three things with the internal ecosystem, internal processes into play. Again, fees and charges, accounting, reports, etc., etc. And it also connects to external ecosystem where it might include like the fintech applications I might have. It might send KYC data to government agencies. I might be able to send how if a customer has not paid onto their balance, I might be able to report to credit bureau that, hey, this customer has not been able to pay its balance without doing a lot of effort, again, in a very scalable, very modular, very on cloud way. So this is the architecture of their platform. So again, it's for banks, NBFCs, offline retailers, and online retailers. Again, we'll come back to why there are offline retailers and online retailers in this. But again, the SME marketplace, the card marketplace, so many different cards, the partners to the SME marketplace, the partners to the cards marketplace. It has credit lifecycle origination, credit management, merchant services, debt management, operations office, eligibility calculator, policy checks, score computation, basically credit score computation or internal score computation, query management, reporting and compliance, activity decision log, etc., etc. If I look here, this is the inputs given: risk and compliance, tax database, KYC, behavioral credit scoring, niche fintechs, credit bureau, etc., etc., and other partners that would perform any form of exercise on these, such as accounting, fees and charges, different workflows, some rules engine into play, etc., etc. And again, this has AI and MI helping with a lot of things such as behavioral credit scoring, eligibility calculation, rules engine, etc., etc. Moving on. So I asked about why these two entities have a reference here. It's because of two things that this software specializes in. The software also specializes in something that's in a trend right now, just called buy now, pay later. So they have this loan origination software, which buy now, pay later is, well, I buy this pizza from you right now and I pay it to you over the next 1 year. So I'm buying something right now, paying it to you later. But what happens with this is, unlike a traditional loan where I'm loaning out 1 lakh rupees, there'll be a proper credit decisioning system in place where it'll go through a lot of people, it'll take a lot of days, and I'll get 1 lakh rupees after some time for me to spend on whatever I'd like to spend. Whereas buy now, pay later is more like an immediate decision system. So the process application to approval of this loan origination system is extremely smooth for a user. Hence, it basically helps with the buy now, pay later thing where the user is able to get an immediate loan um, without making any down payments. If I talk about cards marketplace, well, they have a cutting edge capability of Intellect cards where it does yada yada yada. But basically, this is my summarization for you for the second most popular platform, which is iCredit 360. Now, moving on to financials. So if I look at quarter one financial year 2025, they made a decent chunk of revenue, 600 crores. Well, just to give you an idea of them, NCAP is somewhere between 12,000 to 14,000 crores. So pretty good considering to market cap. Out of which they have had 312 crores in license linked revenue. Moreover, they also have 750 crores in annual recurring revenue. So annual recurring revenue is something that a lot of investors look at in a company. Basically, the gym membership that you have, it's a recurring income. So an annual recurring income for a company is basically the subscription cost it has that it knows for a fact they would get for a few years before it's not subscribed anymore. So 750 crores with annual recurring revenue is quite a good number. They've had 11 deal wins and 12 go lives, new digital transformation. If I look at the profit after tax, it's 74 crores. Talking about LTM quarter one financial year 25, LTM is basically last 12 months. So if I look at the revenue it has generated from quarter one financial year 2020, quarter two financial year 24 included to quarter one financial year 25, they made a revenue of 2,300 crores. Platform revenue is 225 crores. License revenue is 458 crores. Profit before tax is 418 crores, which is quite a good number. If I look at their annual recurring revenue, we see it's 688 crores annual recurring revenue. It's 750 in the slide before, but 688 right now. It's maybe because it's taking a average ARR it has acquired. That means not including a lot of deal wins that it has had in quarter one financial 25, which is basically a good sign because you're seeing this ARR number actually increase from 688 to 750. 52 deal wins for that year, 56 go lives, new digital transformation. That's a pretty good number. Talking about their financial results, they have some like-to-like total revenue, and there's a significant difference in total income and like-to-like total revenue. Well, the reason behind this is I had a look at this company and they were using some external entity to help with their platform, and that was also generating revenue. Hence, I think they've subtracted the revenue generated by this external contractor in developing this platform. Hence, if we look at the like-to-like revenue, we see a significant jump, though not a lot of difference compared to the previous quarter, but from last year, there is a good 50 crore jump. If I look at LTM year ended, that means last 12 months year ended June 30, 2024, 2,317 crores, 2,100 crores. So the revenue is rising. The software development expenses are sort of flat. That means the software has sort of reached a stage where majority of the heavy lifting is done, and it just needs some amount of money to keep developing the software iteratively, not exponentially, and maintaining it. Um, let's just go down to profit loss after tax. So for LTM, this year we have 314 crores, whereas LTM for the previous year, 291 crores. There is a small jump in profit after tax. But let's go on with what else the investor presentation has to say. Revenue mix, currency wise, for this quarter, we see only 26% of the revenue has come in the form of rupees. Rest all is from abroad, 37% from the US, 8% from Canada, 14% in uh, pound sterling, and 6% in euros, whereas 9% in others. Most likely it will be Middle Eastern banks or Southeast Asian companies, as they pointed out. But a strong currency-wise mix here that shows they have good clients across many, many countries. Um, Talking about the current funnel of Intellect. So it's basically the deal sizes that they have. So the deal size that they had the same time last year was 7,240 crores worth of active deals, but right now it has jumped by about 1,300 crores. And number of opportunities out of which these deals are coming have also increased. If I look at destiny deals, basically they're talking about deals that change the company a lot. So compared to last year, the company has 13 more destiny deals and average deal size is 52 crores. Just to take an example from Destiny deals itself, they have had at least 650 crores of deals, which is pretty good given the market capitalization between 12,000 to 14,000 crores. That's also one needs to consider. There have had consistent growth in big ticket deals. If I talk about deals above 50 crores, they have 23 deals above 50 crores compared to 18 the previous year's quarter, and we are seeing like strong commitment with a good win rate, like two deals won, one lost, two deals won, one lost, 5-1, one lost, 9-1, three lost. Again, a good conversion ratio, and if they keep the space up, and given they have a good platform, there can be good returns to be made in this company. Now, moving on to the deal wins they have had. Again, this information is from the investor presentation report. I just want to go through it with you guys so that you can have an understanding of their platform, what deals they've been making, what deals have been selling. So two deal wins in Australia and New Zealand. One of the four largest financial institutions in Australia, in terms of market cap, renewed their partnership with eMACH.ai's corporate treasury exchange liquidity management. MNC banking and financial services in Melbourne, Victoria, second largest bank by assets, fourth largest by MCAP, chose eMACH.ai for their corporate treasury exchange to update time deposit in its key network countries, Australia, New Zealand, Hong Kong, Singapore, and India. So it's working for corporate treasury and exchange. If I look at one deal in the Middle East, we have some bank putting in a cap with a capital of JD 200 million, chose eMACH.ai for their Iraqi market. And I think for Iraqi market, this might be some Iraqi dinar or something. Um, Three deals in India and Bangladesh. Public sector insurance company owned by government chose eMACH.ai for integrated treasury management solution. A leading financial institution and a global investment management firm created a strategic alliance. One of the stock exchange in South Asia chose eMACH's brokerage product for its tailored OMS and RMS. For North America, they have partnered with Vancity, Canada's largest community credit union, for a 7-year deal leveraging Intellect's digital engagement platform, again based on eMACH.ai. Insurance company um, choosing Exponent and Magic Submission of eMACH.ai to streamline their underwriting effectiveness and increase efficiency of submission handling processes. A wholesale insurance brokerage with specialization in transport industry chose eMACH.ai's Magic Submission and Exponent for loss run extraction and analysis to accelerate their underwriting submission. Good news there. If I talk about stock information, again, as of 30th of June, their market cap was 15,000 crores, average stock price 1070. If I talk about their shareholding pattern, investors only have 30.26% stake. Foreign portfolio investors have 27.5% stake. About 4.5% stakes are held by mutual funds, and the general public would have the remaining chunk of 38% odd. And well, that's my analysis on this mid cap company that can be a future leader in fintech platforms for banking, financial services, and insurance. I would ask you guys to keep an eye out for Intellect Arena and Design, and I'm sure there's some bug to be made there. Thank you so much, guys, and I hope you guys have a very nice day. Cheers.